It's been a good first half of the year for the Bluefield Solar Income Fund as it continues to benefit from its strategy of fixing prices 3 years in advance, enabling it to grow its revenue in the first half to £91.6 million, up from £78.5 million. James Armstrong is a regular guest of ours here on the programme. He's the managing partner at Bluefield Partners, an investment advisor, the Bluefield Solar Income Fund. James, welcome. What's going on? I want to talk about the share price in just a few moments' time. Anybody that knows this path well will be a little bit alarmed about the direction of travel there. I am a shareholder. I've spoken about this before. I remain so. So that's my positioning here. But let me ask you, first of all, talk a little bit about where we are in terms of what the company's doing and how it's benefiting from this strategy of long-term pricing.
Yeah, good to see you again, Jeremy. Yes, there's a real disconnect between the results that we announced last week and actually where the share price is at the moment. So we have, on a number of levels, again had a record period. We are heading for the full year to have a very, very strong performance overall, where the power fixing strategy, where we are supplementing what we have, which is largely RPI, long-term RPI linked revenues, which are obviously very defensive for income investors. We also have a very effective power strategy, which you mentioned, which means that we've fixed out very high prices out for the next 1, 2, 3 years, and our shareholders are materially benefiting that from the amount of generation of cash. So our dividend cover is over 2 times cover post debt amortization, post paying the electricity generators levy, which you might recall is for those for any power sales above £75. So all in all, it's been a really, really strong period. And the peculiarity, which you sort of touched on, I'm a shareholder too, as you'd imagine, Jeremy, is that the share price really, for the first period, it's been like this for over a year, for the first time in its almost 11-year history, is at a discount to the net asset value. And I was talking to some investors this morning, and to sort of paraphrase Benjamin Graham, the great investor, Mr. Market appears to have gone a bit mad, because there is on no fundamental basis should the company be trading at what is circa a 25% discount, and it gives investors today the opportunity to buy the company's yield at about an 8.5, 8.6% yield. So it's very attractive. But nevertheless, yes, there is a real disconnect between what were our results and where the share price is today.
Well, let's bring up the share price on the screen and talk a little bit as well about what's been happening, because I know that the Bluefield Solar Income Fund's West Raynham plant has been down. Is that still the case, or has that now come back online? And how much of an effect was that, do you think, on the share price drop, or has that got nothing to do with what's happening?
No, nothing at all, actually. So we've got a very diversified portfolio. So West Raynham is a great plant, and it makes up about just over 5% of our total capacity. And in fact, just for a short period over the summer, the distribution network operator had to have it turned off. So it wasn't to do with anything to do with the plant. It was actually to do with the network, and that resulted in just over £1 million worth of losses that we would have had in our forecast. To give that in context, that is about 0.2 of a penny. So it's very, very small. So it's not material. Where we are, what we're seeing in terms of share prices is across the board, where infrastructure, so long-dated infrastructure funds and the renewable sector, which sits within that as a sort of subsector, we're seeing these discounts to NAV across the board, Jeremy.
Yeah. Okay. Let me just quickly follow up as well on something else that's happened, because you've allocated £20 million to a share buyback program. What's the motivation behind this? Is it because you are concerned about the drop in share price, or is the company in a part of the cycle where it genuinely has this spare cash to allocate back into the share price?
Yeah. So, I mean, we have spent the last, 6 to 9 months looking at how do we address what is this prolonged discount to NAV, Jeremy, which is a multi-faceted challenge. There's no one single solution, okay, in terms of what we should do in terms of how do we address this. Now, I will come back to the point around the share buyback program, which we announced on the 14th of February. But if you think about we've got a responsibility to our shareholders to think about how do we protect and enhance these long-term value drivers that we have in the business. We've got a fantastic strategy with a very large development pipeline, and we've got a generation profile which is sector leading. So what we've looked at over the last period is to say, how do we address that challenge of at one time, at one point, basically saying we've got to enhance and continue to protect those long-term revenue drivers like the development portfolio, but also directly address the short-term issue of the discount to NAV. So we announced two major initiatives in the period and just beyond, which is one, we announced a strategic partnership with GLIL, which is one of the pooled local authority pension funds, a great long-term investor. That's a great partnership for our shareholders because it enables, one, we're going to sell down 50% of some assets, which will create some liquidity, and that in turn we'll use some of that liquidity to be able to reduce down the one bit of the debt stack that we're not comfortable with, which is the short-term credit facility. And then in addition, it will enable us to manage, as a part of that partnership, manage some of our development pipeline going forward. So that solves two very important challenges in one go. And then the third element where we've announced, which is on the 14th of February, is that we have announced with the board a share buyback program, Jeremy. Now, the reason for that is that the discount has widened materially since the new year. We were actually, up until Christmas, every share in our sector was at a discount, albeit that we were at a lower discount than others, and sort of winning the, as I've described, the ugly duckling competition of the sort of discounts. However, it widened, and so now it's very important for us that we will look to, with the board, to manage that discount. So we were actively buying shares in the open market, and that's something which is a £20 million program, which is we're going to look to see how that goes over the next 6 to 9 months, and see whether we need to continue that. But I think the key thing for shareholders is there is no fundamental problem. In fact, it's the opposite. The fundamentals of the business remain as strong or better than they've been in the decade or so that we've been operating. We've addressed this challenge in 3 ways to make sure we can protect long-term value and also address the short-term issue of the discount with the share buyback program. So in a sort of curious way, it's been a very successful period, except we now need to see the market, it reflected in the share price, which we hope, obviously, we will see some re-rating in the short term.
Yeah, let's pick up on the point, if I can, about the pipeline, because from what I understand is you've got planning consents received for something like 137 megawatts of solar projects and 90 megawatts of battery projects as well. You mentioned the GLIL infrastructure support. Where's the money coming through from this? Is it GLIL? How are you paying for all this?
Okay, so first of all, there's no exposure in terms of development pipeline. So we've got 2 assets which are just over 90 megawatts, which is called Yelvertoft and Mauxhall Farm. So they're going to be grid connected in the next couple of months, and they've all been funded. So that's the first point we've got. Then you've actually got what you're referring to is just the new planning consents in the period under review. So we've actually got over 600 megawatts of largely consented solar sites, which we have the option to sort of work out what we want to do with. Now, part of that, a small percentage, is going to the GLIL partnership, where they're going to support through a co-development agreement, support the funding of that. The key thing for our shareholders is, if the market remains shut, Jeremy, we have got an incredibly valuable pipeline of assets which we can sell to third parties. Most of them have what are called contracts for difference attached to them. So we've gone into the auction market and won those 15-year CPI index-linked contracts. They are enormously valuable to the business. So as I say, if the market remains shut, we can sell them to third parties, and they will be very accretive to the overall NAV that we have. So it's a great bit of optionality. And we're completely managing that process. So there's no challenge in terms of whether we've got that. There's no liabilities. We're just looking to see how we can best manage that. And if the market remains shut, they will go to third parties and will take on, obviously, in the moment the market opens up, we'll then be in a position, hopefully, to be able to fund those assets because they will be very valuable to shareholders over the long term.
Okay, all right. Let me put this back into what all this means for shareholders, then, if I can, and go back once again to the share price chart and bring this up and talk about where we are at 104 pence, market capitalisation 635. Given all that you've said, what should be the share price, given what the company is doing and how it's going to benefit?
Well, let me give you some. There's a disconnect at the moment,
Yeah.
Jeremy, between where the public market, so this is the investment company market, share prices are for someone like BSIF, and where you're seeing transactions happen. So I'll give you practical consideration. There was a very big UK solar transaction which took place and was announced post-Christmas, 500 megawatts. And so it's a very good size, identical sort of types of assets that we have in our portfolio. That went for a valuation which would be very accretive to our net asset value. So on a market comparison, on a open market basis, that would support our NAV, which is 136 pence per share. And as I say, the share is at about a 25% discount to that. So that gives you an idea of where transactions are happening and where we fundamentally believe that the NAV should be and where the share price should get back up to. And typically, as you know, being a shareholder, we have traded at a premium to NAV, not even on NAV. So, I think there is, and there's no reason apart from, as I say, this sort of aberration at the moment in the investment company market for infrastructure funds. There's no reason why it shouldn't be trading on or around NAV.
I think in the past, when you and I have spoken about this, you have referenced as well the rising gilt yields. Has this still got an issue on this pricing as well?
I think it's now old news.
Right.
I think when it spiked during the mini budget, and we spoke around that time, it was a very dramatic shift, and investors were really sort of blindsided by the doubling of what were gilt yields, certainly UK gilt yields at that time. At the moment, you're looking at gilts, so if you go off the 10-year or the 15-year, you're talking about 450 basis points.
Mm-hmm.
We have what is, the term we have is a discount rate, which is 8%. So it could be sort of 800%. You're talking about a very significant premium for shareholders above that risk-free rate. If you then add in the discount, you're talking about what is a double-digit return for shareholders. So again, it's sort of, that feels like it's old news, and there is just as I say, a sort of a bit of a irrationality in the market at the moment.
Okay, all right. Look, James, I have to leave it there, but thanks indeed for joining us, explaining some of what's going on for shareholders in the Bluefield Solar Income Fund. Thanks for your time. That's
Thanks,
James
Jeremy.
Armstrong. He's managing partner at the Bluefield Partners and Investment Advisors of the Bluefield Solar Income Fund.